FountainFX on Monday the 17th of November 2014. We've actually had, last week there's quite a bit of news that came out on the pound, the US dollar, Canadian dollar, Aussie, etc, etc. Bit sort of hit and miss, but as we can see on Friday at the top of this screen, Canadian news came in quite positive, also US news quite positive. Consumer sentiment is up in America, so it's all going well. And then this morning, Monday at just before 2 o'clock this morning, Japanese yen, preliminary GDP, gross domestic product, quarter-on-quarter news information, forecasted to be 0.5%, so they were looking for growth. Previous month was quarter was minus 1.8%, and the reality is it's minus 0.4%. So Japan is very much in a recession. Quarter-on-quarter declining, shrinking. So perception is that the Japanese government has got to do something to try and stop this decline. Therefore, they're going to be doing things with interest rates and potentially with currency values and all that kind of stuff. So expect the yen to be devalued because Japan's core economy is that of manufacturing and exportation. So let's go and take a look at what it's going to do to the market. So here we are taking a look at the US dollar yen. As we can see, it's been in an uptrend on the 1 hour chart. If we go to a higher chart, we can also see that it has been in the uptrend as well on the daily, the weekly and the monthly. It was on the monthly that we were identified that we're sort of in between two levels, and the potential target is 122 yen to the dollar. So we're currently just around about the 116.20 here at the moment. So we've got roughly 600 points to go, which would be a very nice trade. However, what we're looking at here is we're looking at the fact that at 2 o'clock this morning, once the news had come out on the yen, which was bad for the yen, what happened? This is where price reversed. And this is how sometimes the market can react to news in an adverse way to the way in which we would expect normally. I mean, for the yen to give really, really bad news and yet price goes down on the dollar and up on the yen. So slightly strange there, but we can take the simple trade, which is we trade the counter trend. So price pulled down. At this point here we have a break of this trend and we have a very strong bullish candlestick, so therefore that gives us a trade entry here at the 115.98 to then go long. However, price is pushing up. We've started to see a bit of a stall, not a huge reversal candlestick pattern here, but it's almost like price is just sort of going sideways. So it may give us a good opportunity to enter for our long position to carry on up. If it doesn't, there's another way. We could sit and wait for price to pull back further down for us to take an entry down here again. If it does come back down and test this level down at the 116/115.9 for us to then buy down here. So we need to see what's going to happen with the close of this candlestick here. If when it does close it is bullish and it breaks above the high of this bearish candlestick right in the middle of the chart, then it's confirmation that price still wants to go up and we should be buying at this point. So that's really it from FountainFX. It is still a case of look for longs. What we do want to see is we do want to see this high up here at the 116.90 get broken for price to continue and push up. If on the other hand we start to see some bearish movement or selling moving down, we could potentially be seeing a reversal. So what we need to do is we then need to plot our trend line to this level so it's not as aggressive, and we look for this particular break, the break of this trend line now for our trade entry. So if we do get a break from this bullish candlestick or the current candlestick that's forming, then that will give us a trigger to enter and go long, and we can place our stop below this low. That's it from FountainFX. Have a great day. We will catch you tomorrow. Bye bye.